Well, hello, everyone, and welcome to another What's the Point podcast about economic development in Wyoming. I'm Josh Durrell, the CEO of the Wyoming Business Council. And with me today, I have Bert Adam, who is our investments director. Bert, thanks for being here.
Yeah, you're welcome. Great to be here.
Right on. Well, Bert, we're going to talk a little bit about YBC.
Okay.
We're going to talk a little bit about what you've learned in economic development over the last few years. But before we get into any of that, let's just take a little trip down memory lane and talk a little bit about how you got started at the Business Council, maybe even what you did before that if you want,
Sure.
And then take it up from now.
Sure, you bet. Yeah, I'll start a little bit before that because it's important to know kind of a well-rounded experience. I don't have a degree in finance. My degree is actually in computer engineering. Did a lot of work, 10 years doing digital marketing, running development teams for software developers, and then transitioned into being an entrepreneur. Had a failed venture, we ran out of money, had to get a job. And so I said, how can I help more entrepreneurs be successful? And transitioned over to the Business Council, helping entrepreneurs in the state of Wyoming. And then after that, transitioned into investments.
All right, so your work in the private world and then as an entrepreneur and then moving into a little bit more quasi, but definitely public sector. So talk a little bit about your first gig with the entrepreneurial services.
Yeah, it was a lot of fun to just see all of the things that are going on in Wyoming. When I started, I thought I didn't think there was much going on. I thought maybe a couple startups. And then as I got involved with the Business Council, we started doing the Small Business Innovative Research Grants, or SBIR. Saw a lot of really cool things happening from the R&D layer in Wyoming, and met a lot of different startups at events and things like that, and learned through what we wanted to launch, and has now launched through Kickstart, sort of that other layer of what was going on in startups, and it's a lot more than I thought when I started.
Right, there is a lot of activity going on in Wyoming. There are a lot of pretty interesting things. And there was a big chicken and egg problem that that you identified, I think, really well, probably articulated it very, very well, and then came up with a way to maybe break some chickens or cook some eggs or something like that.
Yeah.
So do you want to talk a little bit about that?
Yeah, that was our interest in the State Small Business Credit Initiative, which was a federal program that allowed us some flexibility with helping entrepreneurs. The dollars have to be focused within your state or your region. And so for us in Wyoming, we had to invest those in Wyoming businesses. We had the option to potentially do debt or equity. And we already had 11 debt programs through the Business Council. Decided that maybe we had enough to cover the gaps that existed, and we didn't have anything with equity. Turns out we can't just create entrepreneurs out of thin air. We were running into the problem of, well, there's no entrepreneurs because there's no money to invest in the entrepreneurs, and there's no money to invest in entrepreneurs because there's no entrepreneurs. So it was a chicken and egg problem of deal flow and entrepreneurship. And because we couldn't create those entrepreneurs out of thin air, we said, we have an opportunity with federal funds to make investments, to solve one side of this equation, or at least put pressure on it, and say, well, if we put funds out there, what happens to the other side of the equation, right? What happens to the entrepreneur? Do they start showing up? Do we get some wins? And what does that look like? And so we launched that program, I want to say 23, actually it was January of 23, and $58.4 million that we kind of separated into a couple buckets on how we want to make investments. We can make direct investments into Wyoming businesses, and then we can invest in venture funds that are focused on Wyoming businesses to really truly try and change that or solve for that funding continuum where those gaps exist.
Okay, so before we jump into that too deeply, because we're going to go pretty deep into that, I want to take a quick step back because, earlier on we were talking about there are a lot of entrepreneurs in Wyoming. There are more than you expected, and they are at various stages. So, and now we're talking about a particular program that the intent is to increase the number of firms that are maybe looking at equity rounds or looking at investment from an outside. So I want you to do me a favor and do everybody that's listening a favor and talk a little bit about that continuum because, somebody in their garage with an idea versus someone who maybe is going to do an IPO. There's a little bit in between, and there are a lot of parallel paths, right? There are a lot of people who are like, this is a lifestyle business. I want to sort of like make it so that me and maybe my children can be in this venture, but it's not necessarily going to approach the world market or something like that. So can you give us just a little foundation?
Sure. So that is a really big continuum, right? And I'll start with, not every business should take on venture, right? So if your business is high growth, where you're thinking that you need a lot of money to grow very quickly to take on the market because maybe there's competition or there's other factors that you need to grow and scale quickly, venture is probably the right option. To your point, most of the businesses probably don't need venture. They need debt, or they need other ways of funding to get those sort of headquarter businesses or lifestyle businesses, something you want to hand down to your kids, to get those started and have the working capital you need. If you do go down the venture path, though, it is a little bit of a hamster wheel. Right? Is you start with maybe some angel or friends and family funding, and after you hit some of those milestones and you start scaling quickly, then maybe do a pre-seed round. Okay, and then most of these rounds are designed to carry the business through milestones for about 12 to 24 months. Okay. So that's sort of that hamster wheel, is you hit those milestones, and then the next thing is raise the next round to keep that flywheel going. Right. And so maybe you raise pre-seed, and then maybe it's a seed round. Maybe your seed round is a couple $1 million, right? $2-3 million. And then you can sort of determine what the outcome of the business is. If you're hitting milestones and things are happening and you've got product market fit and that's moving forward, maybe it's time to take that next step into future venture rounds. But also part of venture is failing fast, right? If you got there and it's not working, you probably need to pivot or wind it down, right? And so once you get to that product market fit, you're going for that maybe Series A, maybe you're $10-15 million. We're talking about hiring a lot of people, moving really quickly and get that going. And so to get all the way to that IPO, some companies go to Series D, right? So Series A, B, C, D, and they're raising $50-100 million at those later stages. And usually that last round is the catalytic round to get you to an initial public offer.
Right. Okay. And so again, I do want to spend a little bit of time on this because I think it's important for people to understand all of that stage. So we had Kickstart, I think maybe 2016, 18.
18, 19, yeah.
Okay, so 2018 was when Kickstart was around. And then we also had the SBIR matching program. Yeah. And both of those are really early stage. And then you have your like entrepreneurial contests where you could go kind of do a pitch contest and win a little bit of money to kind of get you going. But SBIR and Kickstart are also ways to feed into that.
Yes.
But then we noticed that there was a really big gap or almost nothing in a really big area, like a desert, if you will. And there were some deals happening, a little bit of deal happening, but what we heard was that there's not enough money to attract enough deals, and there aren't enough deals to attract enough money. Yep. The definition of a chicken and egg problem, which you spent, I think you took about a year, because your first year was gobbled up by a pretty interesting program that was right. It was entrepreneurial in nature, was the way we solved it, but not what we're talking about today. And then that second year, you really looked at the whole continuum and said, "Hey, I think we have a chicken and egg problem here," and it just so happened that we had the perfect opportunity to sort of put pressure, and that's really one of our kind of our modes is to say, okay, if we identify a chicken and egg problem, we don't just walk away. We say, okay, how do we put pressure on it? And your hypothesis and our accessibility of funds was that we could put pressure on the money part and say, we're going to pump money into the system and see if that changes deal flow. So tell me a little bit more about why VC, kind of give me that, and then work through where we are today.
Sure, yeah. And I think part of the chicken and egg problem, I really relate to, we built this fund, YVC, and a lot of people that go raise a venture fund, it takes maybe 2 years to raise the money to invest. It took us almost 2 years for a federal application and to go through all the hoops to get this set up and ready to go. And so while we didn't have to raise money like a lot of funds, we had a very similar process as we went through it. And as we were going through that process, we did a lot of surveys. We tried to understand where the capital is, what gaps exist. And what we found is Wyoming has a lot of startups, but they were dying. They would get to that point where they got maybe friends and family, maybe they got an angel round, maybe they won a pitch competition, or maybe got a Kickstart, and then there was no money. There was nothing for them to do. And in sort of that era of 18, 19, when they were overseeing this, most coastal or regional venture funds wanted the startups to be located near them so they could share their network, so they could introduce them to the right people. And so the only way Wyoming businesses were successful in that next stage of scaling was leaving Wyoming, which we wanted to change with this fund. So developing YVC helped us, to your point, put pressure on that system and say, all right, we have capital. We're not investing in every deal. In fact, we invest in maybe 1 out of 10 deals that we see, because we still want to be selective. We still want to make sure that we're making really solid investments, that these businesses aren't just doing venture capital because it's easy, but they know what that sort of next step is, and we're preparing them for everything coming forward. And so I think having that ability and that sort of maybe foresight as we were building the program was really helpful. What else do you want me to dig into as we talk about YVC?
Well, okay, so we invest in maybe 1 out of 10 deals. I would say, how much have we invested on an individual, at an individual company level?
Yep.
And then what is the fund side look like? And so maybe start with the individual investments versus the fund investments.
Sure.
And then what have we done so far?
Yeah, great question. So on the direct side, so us investing directly in businesses, based on treasury rules, we can't be more than 50% of the round that they're raising.
Okay.
And our funds have to be less than $5 million. Those are treasury guidelines. Okay. Internally, we have sort of rules of thumb. We like to be about 20% of the financing round. Our goal is to be catalytic and help all of these startups through a letter of interest where we say, yeah, we've done initial diligence, we've looked at the company, we're comfortable, we want to say maybe invest $2 million into this company, and that'll be 20% of their $10 million round, okay. Right? And so that helps them go get a lead investor. So we also don't lead, which means we're not setting the terms. We're not crunching down a valuation. In fact, we take a really interesting spot in this, in that the founder is sort of our stakeholder, and we're more on their team than the other funds that are investing. And so we can help do some negotiation behind the scenes if there are terms that a founder doesn't inherently like, and we can work on those instead of it just being the founder pushing on that lead investor.
Right.
So that's sort of direct. Maybe our lowest check size is about $250,000, and our current highest check size is $3 million. We try to stay within that range. We could go to 5, but it doesn't make a whole lot of sense from a portfolio construction to put that many eggs in one basket. Right. On the fund side, and because on the direct side we have maybe more capital, right? We have 60% of that, $60 million in direct. What we chose to do with the fund side is try and support funds that are earlier on in sort of that funding continuum. So helping that stage, and then on the direct side, we take that next step and hopefully build those introductions to the coastal and regional capital. So trying to bridge the whole continuum. Right. But the funds are typically your pre-seed seed funds. So maybe a fund has $10 million to invest, and they're writing $250,000, $500,000 checks, and maybe they'll write another $500,000 check on a subsequent round.
Okay. So there again, we're sort of we're working on the entrepreneurs and trying to help them on the individual side.
Yep.
But then on the fund side, we're trying to get funds moving and developing in Wyoming. And then there are some already, and then there are some that we're working with that have started up as a result. And so our job is to kind of kick that ecosystem into high gear.
Yes.
So how much have we invested so far in both of those areas?
Yeah, all in, we're about $18 million invested.
Okay.
We have 8 portfolio companies that we've invested in direct, and then we have the fund that we invested in, and they've made a couple of investments.
Okay.
So we have stake in about 9 to 10 companies, depending on how you want to look at it.
Okay. How much capital have we leveraged? So we put in 18 million. What is the other side of the investment that's been into those deals?
Yeah, the other side of that investment is right around 100 million.
Okay.
So we're at just under 20%. We're at like 19%.
Okay. So we're leveraging a lot of money. So the good news is that, and again, this isn't to say that without our money, some of those things wouldn't have happened, but we tend to be catalytic.
Yep.
We can't lead around. We want to be small in that round. And we can get pushed out of rounds, right? So we've been pushed out of some rounds. Right?
Yeah, we've been crunched down. We haven't ever been pushed
totally
out. But that's something we would like for it to happen, is saying, hey, we're going to give you a letter of interest that we want to make this investment. And maybe they get a whole bunch of strategic investors that are way more valuable than we would be on their cap table.
Right.
And so we've been crunched down quite a bit. Right? I think at one point we were willing to write a $2 million check, and by the time it came to closing, we only wrote $600,000.
Right. So that is an example where that LOI could catalyze more money coming in, which is a really good thing. And so I want to talk to you about 2 topics, both of which are controversial.
Sweet.
And that's just the precursor to more controversy later.
Okay.
So one of those things is that, so we have a YVC, that's like a Wyoming Venture Capital Fund.
Yes.
Okay. And typically speaking, venture capitalists invest in something to get equity so that they can get a giant return later, right? Like that's the game.
Yep.
So help me understand how we are as a state investing and getting equity.
Yep.
And hoping to get some big returns. So we'll talk about big returns in a second, but let's talk about how can we even be on the cap table?
Sure. Yeah, well, great question. Because the way we can be on the cap table and make these investments is because it's federal funds.
Okay.
Right?
Yep.
And so that unlocks that door for us to make equity investments. We're buying shares of their company, and a certain percentage of that company, along with the other investors. Typically in a round, a company sells about 20% of the equity every time they have a round.
Okay.
So the founder gets diluted the further they go.
Right.
But having 100% of zero is not as nice as having 10% of a million.
Right. Well, so what we're doing is we are utilizing federal funds to do something that as a state entity we couldn't do.
Yep.
But what we're working to do is really we're trying to catalyze that growth, but we want to have a return, right? And so let's imagine we do really, really well, and let's imagine that it's sort of typical, like maybe one of these out of the 10 or 9 or 10 that we've invested in pops.
Yep. And
we get a 10x or a 20x return on our investment.
Yep.
Then what do we do with that money?
Sure. Well, maybe let's start with, what does a return look like for us?
Okay. All right.
Because financial is one lens that we look at, but economic impact is the other lens that we're looking at. So we sort of have a double bottom line as a quasi-state agency investor. And so not only are we making investments that could have the potential of having 10x, 100x returns, we're also making investments that drive economic impact. So all of the investments we make have both lenses, and they are going to hire people in Wyoming. Right? So we're getting 5-year job projections. We're trying to understand what that impact could be. We're trying to make sure that if they have a cap table, how many other Wyoming investors are on there, so that we're building wealth. And so we're doing a lot of different things inside of what a return looks like. However, when we think about just the financial side, the goal is to have these investments, again, maybe it's only 1 in 10. We're going to have losses. We're going to have bets that we make and equity that we buy that results in zeros. And that's okay, because we're trying to do hit home runs with these, and strikeouts don't really matter. So that's kind of the way that venture works, is as long as you hit 1 in 10, you're usually okay. You usually make enough money to pay back the fund, and everybody makes money.
Right.
So when we do make money, that will go back into the fund so we can make more investments.
Okay.
So we're trying to create an evergreen fund,
Right.
and not necessarily the same investments, right? We're trying to say, what's the next gap in that funding continuum? And we can pivot as we get returns and change the part we're playing in. So if our fund investments grow, and maybe their first fund was $10 million, and 3 years later they raise a $50 million fund and they're playing in Series A, maybe we don't need to be there.
Right.
Where do we need to go next? And so looking at that with our returns.
Okay, so we obviously want to make good investments and win. We're doing a lot for the ecosystem by investing in those.
Mm-hmm.
We would love to see some big return, because then that gives us opportunities to invest in more and to do some other things. That's a pretty good difference between us and a normal venture capital fund.
Yep.
So we have that double bottom line where we have the building of an ecosystem in Wyoming. And so this is a discussion you and I have had before. So what happens if we're wildly successful and we have hundreds of millions of dollars?
Mm-hmm.
Do we just keep doing venture and try to make it a billion? Do we try to make it 5 billion and fund all kinds of economic development opportunities? Or do we say, okay, we've sort of fixed this chicken and egg problem. What's the next chicken and egg problem?
Yeah, it would be fun to go make $1 billion. That sounds like a good time. But I think what we do is solve problems.
Right.
So if there's not a problem in the ecosystem and there's not another gap that needs to be filled, we'll pivot to the next challenge, right? I think we have the opportunity and maybe the responsibility to try and fix those gaps in funding or whatever gaps exist for entrepreneurs in Wyoming.
Right.
And we're not limited to how we invest these dollars long term.
Okay. Yeah. And so, and I think that's an important thing, because this is a really, again, it's an important thing, especially in Wyoming, but I think it's an important thing everywhere. It's like, what is the role of government or a quasi-agency like ours? What is our role? And our role in a lot of ways is not to become the next big venture fund that is just like killing it out there. Our role is to say, what is stopping Wyoming from cranking out entrepreneurs and making it so that companies can succeed and our populace can succeed in the smallest way possible. That sounds really good when you just say it, but that's going to be a challenge for us, right? Like, that's a real challenge, because if we go out there and we start doing really, really well, probably going to want to keep doing really, really, really well. So I think, one, I wanted to get you on tape saying that, so that you have to own up to it later.
Yeah.
Because it's an exciting world to play in, right?
Oh, yeah.
It's a lot of fun. But at the same time, we got to have that discipline, and I think that's going to be a challenge for us.
It will be a challenge, but I think it's, to your point, it's the responsibility of government. We've got to solve the challenges that the private market's not going to solve. And if we've catalyzed the private market, we have a full funding continuum, we don't need to compete with them. In fact, our goal is to get pushed out on more deals, and when that happens, we need to find the next game.
Nice. Okay. So that I like that a lot. So YVC was really something that you worked on mostly when you weren't in your current role.
Correct.
So that was when you were in the entrepreneurial services area. You were trying to figure out, how do we unlock more entrepreneurs in Wyoming? Mm-hmm. Do that with policy, with programming like this YVC, or with leadership. So all of those things were happening. And then you got an opportunity to step into the investments director role, which has all of these programs that you're working on. And not to just say that it's only money, though. You also work in policy around this. So now tell me a little bit about more of the breadth. You don't have to go into crazy detail on each one, but give me more of the breadth of the tools we have.
Yeah, it continues to grow. Okay. So when I took on the role, it was loans, challenge loans. We have debt that we can offer to businesses. We have a Business Ready Communities grant and loan program that allows us to give grants and loans to communities to build assets or do infrastructure to get ready for businesses. And then we stood up this YVC equity program. So we had equity, grants, and debt. And then recently we've also added in that Kickstart and SBIR section, which is kind of sits right between grants and equity, right? It's startups on the equity side. We're giving away non-dilutive grants as they come through the program to help them get to that milestone so maybe they can raise, but they are grants.
Right. And so we're extending their runway, but we're not taking any equity.
No equity on those programs, right? That's just a way for us to help more businesses get from idea to product market fit. Okay. Build that funnel of entrepreneurs. And so it's kind of like a three-legged stool, even though we've got SBIR and Kickstart that kind of sits in between equity and grants. We've got 11 flavors of loans that we can offer. They go from about $25,000 to $25 million. Okay. And we have in the BRC funds today, I think we have about $70 million that we can use for grants and loans. Okay. And they're ever changing. All of those programs are ever changing. Right. We're continuing to iterate and tweak things as we go forward.
Okay. So when you say sort of like tweak things to move forward, let's talk a little bit about, so on the surface, BRC, Business Ready Communities, is intended to help a community be ready for business by providing funding for infrastructure or an asset that they can then use and own. Yep. It's publicly owned, and then they can use that to kind of catalyze their economy. Yes. But I want you to, so on the surface, that's what it is.
On the surface, that's what it is. There's some things that are under the surface in capacity and with all of those programs, one thing that I think at first when I took on this role, I didn't think enough about was actually our involvement in our ability to lead. And as we're talking about YVC, our ability to be a board observer and really help coach, I think is actually more valuable than the money we invest.
That happens a lot. I think a lot of people in those circles in the investment community would say that their impact is probably greater than the money, but the money gives them an opportunity to have that impact. And I think we're trying to do the exact same thing with BRC. Right? BRC has sort of been a money tool for a long time. We've seen it as a money tool and a little bit of capacity building and kind of helping kickstart some communities. And I think it's done a fantastic job of that. I think what we're trying to do now is say that is the money is sort of the secondary or maybe the tertiary thing that is more important here.
Right.
It's like, what is your binding constraint? What is really slowing your growth?
Right.
And if somebody says to us, we don't want to grow, then that's not a good indicator that they need BRC.
Yeah, they probably don't need BRC.
Right.
Because the intent of that is to grow communities, right? To grow an economy, to similar to YVC, to catalyze and get things moving and have both the money and capacity to do the next project and then the next project. So if you think about BRC as it relates to YVC, you're sort of get on that hamster wheel of like, how do we go faster? How do we go bigger? And each time you go through that cycle, growing.
Right.
And that's what they're designed for.
And so there really are, and this is kind of a cool thing, there really are some good parallels between YVC and what we're working to do at a local level with BRC, because what we're saying is, hey, if you want to grow your economy, make it sustainable and really solid for the future, you've got to continually invest in yourself and in your community, and you should be learning along the way. It's not about the asset that you create, you walk away from it. It's like the team that built it, the problem that you were solving, the way it's going to help you, what you might say is lever you up or ladder up to the next step. That's what's more important than the project itself.
Yes.
And I think it's very similar in YVC, right? What the company learns as they're going through that and they're building and learning about the market and the product and all of that fit, and then learning about how they can maybe have an exit one day to generate wealth.
Yep.
It's a very similar thing. How do you continue to, as a community, not necessarily generate wealth, but make it so that your community can generate wealth, the people in your community. So talk about that parallel a little bit, and maybe a little bit more about your economic development perspective. which I know you've spent a lot of time thinking about.
I have.
And not as an assignment. You did this because you are a guy who likes to look at things and solve problems and try to understand the systems at play. So talk a little bit about that.
Yeah, no, and I think the more you think about it, there's just more parallels between all the different kinds of investments that we're trying to do and the leadership and the policy that we're trying to help grow communities, grow businesses, get everybody to level up and think and have the confidence that they can get to that next level, whether it's community growth or business growth. When it comes to perspective, I think my expectation and sort of my hope for communities is that they want more, that they want to get bigger, that they want to do the next big thing, and that they're not satisfied with where they are today. Just like that's the same hope for a business. If you get satisfied with where you are today, you're done scaling. Right. If you start playing defense in a business, if we think about like a Blockbuster, you get ran over and you're gone. And so we don't want our communities to do that either. And so we want them to be playing offense, to be looking for the next thing, the next way to grow. And if you're growing in an economy, it's jobs, right? How do you help businesses in your area, your community, create more jobs? How do you help them create higher paying jobs? What's the next level of complexity of those jobs? As you think about, maybe we're doing this, but what's the next thing? Is it manufacturing? Like what? And you keep growing and iterating on those things. I think that it's both the successful way to drive a community and a successful way to drive a business.
Right. I think that's the part that has been really intriguing to me is the parallels, but also understanding that a lot of those things are sort of outside our control. I think in a business, the beauty of working in private business is that you have a lot of control, or you have a lot more control than you have when you're trying to kind of have a community to scale.
Right.
So talk a little bit about that.
Maybe.
Yeah. Okay.
And maybe because as you grow a business, your board of directors grows. Right. The influence that you have as the business owner or the community leader may shrink as you get further along, but you have a bigger team, right? You have a bigger team of either board members or community members that help you grow that one voice doesn't have to carry as much, right? The bigger you grow, right? And that's a parallel for both of them.
Yeah. So you're able to, because you have a bigger team, you can likely solve more complex problems. You could likely have people solving multiple problems at the same time instead of just focusing in on the one thing. And so that scale is going to help you kind of deal with the next level of problems, which always end up more complex, right?
Always more complex, and they always exist.
Right.
Just as you think you've solved one thing, 2 or 3 more things pop up, and then but you need to leverage that team, you need to grow that team, you need to make sure that you're using your leadership to get them ready to take on those next problems, which you've done for our team, which has been super helpful.
We'll cut that part out for sure. And thank you, but so I guess the way I look at it is, so think about policy, and we think about investments a lot. And those are 2 things. Again, you're in the investments director. I want to switch really quickly to policy.
Yeah.
I want to talk a little bit about policy because probably most folks don't think about policy as that exciting or that impactful because it's just a policy. And so when I think about statutes or when I think about rules and things like that, those are really critical. So talk to me about how you see policy shaping the system that we're in.
Yeah, and when I started, I didn't think policy was a thing we could touch. Right? I was like, oh, that's what legislators do, right? And then the more you dig into it, the legislature has given us the ability and in fact the responsibility to create rules for these programs, which is policy.
Right.
And so then you start thinking about, all right, well, how do we want to make the rules that we have for each of these programs aligned with the incentives so that we can get the outcomes we want, build the right systems. And so you have rules. And then once you start changing rules, when I first started, we didn't change rules on anything ever. And I think since I've been in the investments director role, we've had like 4 or 5 rule revisions. Right. It's not fun. It's a lot of red tape and but it's not actually hard.
Right.
And so we're doing another BRC rule revision right now as we're trying to make sure that we align things better. And I think rules just as like the gateway to policy, right? Because then I was like, well, could we change statute? Well, you can. A lot of people will tell you it's impossible, but I don't believe in impossibilities.
Right.
So it's just harder, right? So we can go change statute. We can educate and say, here's what might not work with the direction we're heading.
Yeah.
How do we help legislators see that? How do we help understand where we could go if these were different?
Right.
And then you have a swing at that, and then you're like, well, could we change the Constitution?
Right.
Yes. Turns out you can.
You can, yeah.
It was written by people, and therefore it can be changed by people.
Yeah.
And so,
before you go on, I want to talk a little bit about that whole idea. So we kind of have this a little bit of a process where we say, okay, we're gonna practice, we're gonna experiment, we're gonna run tests to see what matters, and by doing that we learn the problem better.
Yep.
Right? Like every time you run an experiment, you understand the problem better. You know what's going to work better. You know what's not going to work better. And so you're going to do those things. We do that all the time.
Yep.
In every board meeting, every investment that we make, we do that all the time. We've never had the same conversation twice.
No.
And so we're continually working. And then there's like a wall, right? And things that are really, really good and can kind of make it over that wall, they go into what I call rules, right? So then these are the rule changes that we might want to make.
Yeah.
They're a little tougher to change. You're a little more sure about them, and you think that they're a good move.
Yeah.
And so you have rules, you work on those, and you get them locked in, and then they operate. And again, we're still practicing back
Yep. Still testing.
and trying to get a few things over the wall.
Yep.
Well, then you work on rule for a while, and you say, okay, what do we know so well that we could either change a statute based on what we know, or implement that in statute because we know it so well, or get rid of something in statute because we've done it so well in rule. And I think that wall is higher, but as you mentioned, that's, again, people are practicing, people make the rules, people make the statutes, we're people,
Yes.
as far as we can tell,
Yep.
right? And then the next thing is, like you said, that idea that the Constitution, which is sort of like the ultimate system, how do we change that? Well, the wall is higher, and you got to be more sure, and you got to get a lot more people involved, but it's possible.
Yeah.
That was actually probably the thing that I didn't know the most, was that all of those things are changeable by people, even people like me, even people like you, could change these things and have an impact on the future system. And I think it's easy to forget that especially if you're in private business. Mm-hmm. But even in a state agency, it's easy to go, well, that's just how it is.
Right.
I don't think anything is just how it is.
Yeah.
You definitely don't see it that way.
I don't. I think the biggest motivating thing for me is somebody to say, "Oh, you can't do that."
Watch me. Watch me give it a shot.
Right? Yeah. When we talked with our Attorney General, they were like, "You can't do that." I was like, "Well, just tell me how hard it is." Well, it's really hard. Well, you can't.
But it's possible.
Yeah.
It's really hard. Right. And then you can do the analysis, right? Like what is the cost benefit of that, and how is it going to benefit people in the future, and is that cost lower than the benefit ultimately? And I think that's a really, I don't know, to me it's hopeful. It's really hopeful, and I think that's the part that whenever I'm talking to you about systems change or excitement about an area, I know two things. One, you're going to dig super deep into it and know what you're talking about. Yep. And two, you're going to come at it from a hopeful change perspective. And I think that's what's really cool about the investments group that you're leading and the investments that we're making in the state, is that they're well thought out and they're hopeful. Yep. And I think that if you combine those two things, like how can you goof it up? Right? Yeah. Well, Bert, this has been super fun for me.
Yeah.
I guess there were cameras running, but this is just like a normal Bert conversation.
For sure.
And I just really appreciate it. So
thank you. Thanks, Josh.